Good morning, everyone. Today's the 18th of November. Boy, only 10 days away from Thanksgiving. Can't wait, actually. It's my favorite time of the year. Even though, what's funny is in the summertime, you'll hear me complain about the heat out here. Yeah, 104, 105, 106 kind of sucks in California. But boy, you get up here at 3:34 in the morning and get outside. Took my son to work just a little bit ago, and I got to tell you, it is 44, 46. It's kind of chilly out here for California. We're wimps compared to everybody else. 40, 45, 50. We're cold. Everybody else doesn't start wearing jackets. My buddy in New Hampshire tells me, "Oh, you guys are wimps. We don't even start wearing jackets till it's down in the 30s." It's like, yeah, well, call us wimps. I think California cold is different than everywhere else, personally. But anyway, okay, so here we are looking at the markets. Now we are looking at the counter trend up, down, up, which will be a down, up, down day. And you can see in my analysis, I've kind of highlighted this rotation in trend that I think we're going to get a little bit today and over the next couple days. So let me bring that to front. That, let's try this again. That, 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 and that. Bring to front. Okay, so here we go with the patterns. Don't think they brought everything to front. Let's try it again. That, that, that. Right click. There we go. So what we're looking at, guys, is um, a moderate melt up. Okay, just a moderate melt up. I think for a couple of days, and really comes down into this top resistance tomorrow. Indicates that the market moves up a bit into resistance, flat down, harami, and then a temporary bottom. Market moves down, trying to find support. Then you see we get this over the weekend top resistance breaking up or down, carry over, inside breakaway in trending mode, breakaway in trending mode, counter trend rally. And this is really the week I think that we move down into those lows. So as you can see here, I've kind of highlighted this downward trend over here. And I think I'm going to mark the Thanksgiving Day, which is this is the day after Thanksgiving, right there. Okay, and what I think we look at is this moderate trend rotation and then a downward cycle trend. So if I come in here and get rid of this, I mean, I've drawn so many lines here highlighting what's going to come, but I'm going to do it again. So try to give you guys a little feel for what's happening and leave that, leave that. So get rid of some of these. And really what we're looking at here is an excess phase peak pattern. We have the peak here rolling down into the pullback, which is where we're at as of last Friday, moving into a moderate flagging formation, which is what I call the big number two. Remember, we've got dual patterns here. So here we already have a number two, a breakdown. We're looking for consolidation in this area. Get rid of this and this and this. I think I got something that's a number three back here. And what we're looking at, folks, is, a kind of a dual excess phase peak pattern. We've got this blue setting up, flagging, breaking down into consolidation. So we should expect consolidation over here. Secondarily, we've moved down into a larger excess phase peak pattern on a pullback, setting up a flagging formation. So really what I'm expecting is a day or two of upward trending, rolling into a topping pattern and rolling down into this low potentially around Thanksgiving. And that's really what I want you to pay attention to is we're looking at this fairly solid rolling kind of a pattern here. I had warned that, we could see a breakdown, we could see a market anomaly event. I think the anomaly event really starts around Wednesday or Thursday of this week, really aligning over here with this Harami and temporary bottom pattern, breaking down into this lower mode, potentially trying to find a base over here in this area in early December. And that would move us down into this area, potentially trying to build a base, be back into a buy zone here, and then rally back up out of it. So that's really a good uncluttered example of what I think is going to happen. And this, again, hasn't really changed in about 2 weeks. So remember, I'm predicting all the way out here into Christmas and beyond. So remember, I'm predicting 2 months out into the future based on my expectations, my predictive modeling, my SPY cycle patterns. And of course, I have to update the SPY cycle patterns. I will this week or this weekend and draw a whole new set out. But I really do believe we move into this downward trend by Tuesday, Wednesday. So, you've got this buy here mode, which I drew a week or two ago. And we're looking at a sell here up near Wednesday. So, really, you've got kind of an opportunity here for a bit of an upward move. It's not going to be much. I hate to warn you, but from these lows, maybe up to here, maybe about 1.5%, maybe 1.75%. It's not going to be huge, but you are going to catch a nice solid downtrend here, potentially 3%, 18.5 points to the downside, leading to my anomaly event. If you followed me and or gone to my, well, I can't say that. If you followed my research and paid attention to my profile, you'll know that there's a lot of other resources available to you if you follow me. Just put it that way. Anyway, the long and short of it is we're looking at the anomaly event. We're going to be breaking down right over here, and I think we're going to be building a base through here. Now, we could get below this low. I mean, we could all end up back down here in 565, 564. So, I will mark this as a highlight that we could end up down in this area, really on a breakaway type of low. So my research says that this 564, 565, 566 area is a potential downside target for the SPY. Not guaranteed to hit here. This would be kind of a deep low, but really we're looking at this area 580, 579, 577. I think that's going to be our defense zone. If we do get a move down in this area, it'll probably be short lived. It'll probably be, kind of like this, just a blip down, pull back up, and then right into this area. Okay, let's go to QQQ. QQQ is kind of doing the same thing. I did this chart over the weekend for my followers. I want you to be aware that we are looking again at a moderate downturn into the Thanksgiving holiday. There's Thanksgiving. And what we're looking at here is a moderate downturn through the anomaly event. We have the middle area, which I will mark here in light purple. And we have the deeper downward cycle here, which I'll leave in red. And what we're looking at, guys, is we are looking at a moderate downturn in the Qs. Now, again, I still believe we get a little consolidation. So I tried to draw that here. What I would do is what I would expect is a day or two of upward trending before we break down. Okay, and I will redraw this. So what I am kind of expecting is a day or two of upward trending before we start a big breakdown down into this area. and move into this type of trend. Okay, so we are really looking at that flagging. You can see we have the flagging here on the, and I'll draw this for you. We'll mark this in blue. We're getting these dual excess phase peak patterns. Okay, so here we have the peak coming up into flagging, breaking down into consolidation, breaking down to the ultimate low. Okay, now we also have the bigger. So let's call this the big one right here. Big number one. Oops, go away. Big number two. This would be our flagging. This would be our breakdown into consolidation, which would be our big number three into consolidation. And what we're looking at here, guys, is a dual type of a pattern where we're going to get into this breakdown. This is going to be then the consolidation range. So understand that ultimate number five, ultimate low here represents the downward, ultimate downward trend of this short little excess phase peak pattern. The number three represents the consolidation phase of the bigger excess phase peak pattern. Through this consolidation, we will likely roll into upward trending into a big recovery rally into the end of the year and hold consolidation above this level. So I think we're going to be looking at a pretty big move, recovery into December, January, really starting after December 10th, roughly in this area. So we have this buy zone. Really, if you think about it, we have a buy zone roughly right over here, potentially, and potentially right over here. So those are the areas I think the traders need to focus on, protecting and load. In other words, when I hedged, move to cash, sell, hedge now, and then here start anchor longs. This was back over here. Really, what we're doing is buy hedge. This was the pre-election. This is what I did pre-election, and then this is where, whoops, that. This is where you need to really start to look at opportunities down in this area. So this is Thanksgiving and right around December 12th, 13th, 14th. Okay. And this is a big rollover top, and you can see back over here on the SPY, it was much clearer. We had the move to 85% cash back over here, sell hedge right up here at the peak, buy hedge right down here, moving up into this top. You can see we got the sell here. We've been pretty much picking these trends up pretty cleanly. Buy here, sell here, buy here. We're looking at a sell here. We're then going to come all the way down into this area. We're going to be looking at a buy zone down in this area. We're looking at a buy zone over in this area. Okay. And this is where you want to try to buy hedge into the rally phase. So you're getting this really solid rotation. Everything seems to be pointing to this downward rotation with kind of a double basing, double bottoming formation before we rally. And the QQQs are pointing to the same thing. Really, if you look at this, we're looking at a double basing bottoming formation right over here. You can see how I've marked it, a double basing bottoming formation. And again, this will set up. It's going to be a very interesting setup because we have the bigger one here. And then if this plays out the way I expect, and I can show it to you basically by going to here monthly, may not show very cleanly monthly, but we'll go to weekly. Yeah, there's a lot of crap on my chart. I get it. This is one chart that I'm using for everything, but remember, monthly. We get this new high. We get this roll. I'll try to do it in a different color. So we can come all the way across here, all the way across here, rallying all the way up to the high, coming back down into this flagging, and we move into flagging. Okay, so look at this, guys. We are moving into, I don't know what color I'm going to pick. I will pick this color, I guess, and that color. This would be our ultra large excess phase peak pattern. So you can see on this weekly chart here, we keep rallying, pulling back, rallying, pulling back, rallying, highs, pulling back, rally, failure. We come down into a partial excess phase peak pattern here, rallying back to new highs, pulling back, stalling out, failing to flag, rallying, pausing, rally to new highs. So we keep getting these new highs, rolling, rolling, rolling to new highs. This is a big, broad pattern. Most of these patterns are, months, 5, 6, 7, 8 months in time frame. If this big rollover happens the way I expect, this bigger correction rolling down into this, and we flag out of it back into a new high, very solid rollover and flagging to a new high trigger. In other words, we're off to the races, back to the upside. But again, you kind of lose perspective on things if you don't follow these bigger patterns. So we have a very solid, let's call it huge or large pattern right here, pulling back, flagging into this mode, and then rallying up out of it. So get ready. We're looking at a pretty good move here. Okay, gold and silver. So gold and silver have started a nice little rally. You can see here. Let me break this out. Get bigger, get bigger. Ah, darn candles. Hold on. There we go. So now you can see we have this. Go away, go away. Bring visual order, bring to front. Okay. And bring to front, visual order. Okay, so here we have gold and silver trying to make a big move. Silver is rallying, gold is rallying. I'm going to tell you guys that this 2620 area for gold, 2620, 2630, probably going to be some resistance, just like we have this resistance over here in silver around 3115. I think I marked this as well. Yep, 2621. There's our going to be our resistance area. There's going to be our resistance area. We've clearly exited the flagging formation here. We've clearly exited this move with this rally. We came back and stalled a bit, but held up beautifully right off of this low, which is again the low back over here for the flagging. Rolled back up. We're in new upward trending. We're getting good Fibonacci triggers. This is likely going to be our consolidation area. I've kind of already marked it. And here, if I were to give you this is going to be our consolidation area, potentially rallying up to a new high. So now we would want to watch for extended patterns. So now let me come in here and show you what I mean by an extended pattern. So 1 hour, we go to 4 hour, try to get everything on the chart. Oop, don't want to draw. So we're looking at this big, deep downward trend, right? We get this nice little rotation. We're getting our rally up. I mentioned that we would be looking for a broader pattern here, which we don't have yet. What we would be looking for in this big, broader context, remember, I'm now at 4 hours, no longer down at 1 hour, okay, is that we would be looking for a downward trend like this, coming all the way down, coming back up, moving into some broad type of flagging formation. Okay, so try to make this a different color for you. I guess I'll just make it like a bright orange. So we would be looking for this broader flagging. while we're moving up into this consolidation period. This would set up a bigger, broader formation where we would see, as we consolidate through here and move up into our final phase, our number 5 here or here, this flagging would break away up into consolidation, breaking up to the upside. So remember, we're looking for these excess phase peak patterns to kind of layer into what we're trying to do. Okay, so right now gold looks very solid on this recovery. We're probably going to run into resistance around 26.21, maybe a little bit around 26.60, but we're probably going to blow right through that, move to 27.10, and I'm looking for this orange type of an excess phase peak pattern to set up. Oop. So kind of where we're at with this, guys, is I expect to come to 26.20, 26.30, roll down a little bit, flag maybe to around Wednesday, maybe Wednesday, Thursday, and then roll up into this 27.10 fairly quickly. Okay. Good solid rally. Then we're going to consolidate a bit, maybe into Tuesday or so of next week, and then rally. This flagging may not last as long as I've drawn, so, or consolidation might be very short. We'll see how it plays out. But generally, this is kind of what I expect to see happen. And if this holds and it does what I expect, we're on our way, literally, we're on our way up to 2860 to maybe 2900 plus. So we're really, targeting this area. This is where gold is headed next, in my opinion. Okay, come over here, take a look at silver. Silver is doing the same thing. Spread this out. We're looking at a base and a bottom setting up. We've already had our flag. This is a 4-hour chart. This is drawings from last week. Get rid of some of these. Trying to explain to you Fibonacci price highs and lows, it looks like. So what we're looking at here, again, good solid rally. We're up into this 31.10 area, and we're going to run into some resistance right here. So again, we've got this short-term move. I think we're going to run into resistance in this area. What we're looking at here, again, is a move up into consolidation and then moving up into this area. Okay, that's the minor pattern. So you already know we've hit this low. Remember, this 5 is also an inverted number 1. Whoops. Followed by our inverted number 2 for flagging. Followed by our breakaway into consolidation right here, our number 3. Followed by our breakaway from consolidation right here, our 4, which is coming. Followed to our ultimate high, 5, right there. Inverted excess phase peak pattern. But as I mentioned to you, I do expect a bigger, broader pattern to play out like this, coming all the way down into a rolling flagging formation, into consolidation, and up into a big solid rally. So I'll mark that as blue so you can see it. Mark that as blue and mark that as blue. So you can see how these patterns layer on top of one another. And I want you to be aware that, this is the key, in my opinion, part of the key to understanding price function. I mean, I can go all the way down to a 1 minute and do the same thing. I can go 1 minute and then 5 minutes, then 10 minutes, and then 30 minutes, and then 60 minutes, all the way out, and keep doing this all the way out to monthly. And all of these layer into one another to give you a very clear understanding of what's going on. So we're looking at a pretty good move right now, but just expect a little consolidation in this 31.25, 31.50 area in silver. before we get the next move up here to 33. And this is really where I think we're going before, whoops, keep active, come back over here. This is where I think we're going before Thanksgiving. And then after Thanksgiving, we're going to really start to rip. And again, we're looking at this bigger, broader pattern setting up. May not be as long as I'm drawing here. This is all the way into Christmas. November 25th. I mean, maybe. This is a 4 hour. So maybe if we get our flagging and it's fairly quick, we could be moving into this rally phase before December. So, I mean, really, I mean, I'm giving this area right around Thanksgiving, I think. I'm giving this area probably more like December 10th or 15th when we get into that bottoming basing mode. So remember, back over here on the SPY or the QQQ, when we get into this, oh, I'm on the wrong chart. When we get into this bottoming basing mode right over here, this is where I think gold and silver really start to rip higher. Okay, this area. And until then, come back over here, GC. That puts us December 10th. Yeah, that puts us right over in kind of like this area. This is where we really start to rip higher. So again, this would be like my launch pad area for the second phase of this rally. This November 27th through December 4th or 5th, let's call it. Okay, lastly, don't want to waste a lot of time. Bitcoin. Okay, Bitcoin, let's take a look at this. We are moving. You can see how we've countered this down into a 3. You can see, again, beautiful example. So now look at this. Look at this pattern, guys. Look at this. This is just gorgeous. You can see here that we're right at this flagging high. Look at this, coming right across this area, failing every time to get above that flagging high. If we get above that flagging high right here, we're off to the races. This means go long up here, get above that flagging high. We're off to a new high. We want to set off a new high, but we also have this flagging low right here. And this flagging low is now our warning for a breakdown. This flagging low, that's what's so cool about the excess phase peak pattern. Okay, we peak, we come down, we hit a low, which becomes support and resistance. We come back up, we flag, becomes resistance, the top of the flag. We come down into consolidation, which then sets up our range. This is what we've got, consolidation, very clear consolidation right in this area. If we get below this consolidation range, get rid of some of these crazy lines here. Oh, that one I need. That one I don't. That one I don't. That one I don't. Okay, so here's our peak coming into flagging, coming into breakdown, into breaking below flag right here, moving into consolidation, clean consolidation, rolling into this channel. And notice how cleanly, I'm going to draw these with lines so you can see them. I mean, this is absolutely beautiful. I'm surprised, but I'm not surprised. I mean, this is absolutely beautiful. Blue, 4, coming down here. Look at that. Just absolute rejection right in. I mean, this is textbook, a beautiful textbook example. So if we get above here, go long. This is a good solid breakaway rally. If we get down below this area, which should be next, go short. Okay, I'll do this caps and make this red. Now, you ask me like, okay, guys, what should we do? Well, okay, given where we're at, and given the fact that we continue to establish these, this is 4 hour. So you need to look at how we've closed. Have we closed above these higher highs? Have we established points at which we've seen upward trending. I guarantee you, if I go down to a 30-minute or a 1 hour, we're going to see bullish trending through here. And then we're going to set up a bunch of new highs like we had right here, standout high. We broke above it. So this was bullish trending, trying to break above this high, establishing a new high. Again, back to Fibonacci price theory. New high price rally, rejected. What happened here? It became rejected. What happens to price? Remember, price is always attempting to establish new highs or new lows. Back to Fibonacci price theory. Okay. Price is always attempting to establish new highs or new lows. If price can't establish a new high, then it must, again, it must attempt to establish a new low. If price cannot establish a new low, then it must attempt to establish a new high. Remember, this is all price does, okay? Really. And of course, we can come in here, go away, come in here, and lastly, price is always either trending or flagging. Well, look at that. So remember, this is the general rule, guys, okay? It's always either trending or flagging. In this case, we're sideways flagging, right? We're getting this rolling pattern in Bitcoin. We're not getting any real trending. And if you come in here and you take a look at this from a standpoint of where we're at, we're rolling through this sideways trend. We've rejected establishing a new high. So we then must attempt to establish a new low. So that means Bitcoin is coming down into this lower channel, trying to break this low right here, and then eventually down here to this level. So we are attempting right now to break this. We are in a downtrend. We are likely going to see this continue downward. Why? Okay, because it must attempt to establish a new low after failing to attempt to establish a new high. Same thing here. If it can't establish a low, it must try to take out a high. If it can't break out a high, it must try to take out lows. Okay, it failed coming down. If it then can't take out lows back over here, can't take out this low, then it must try to take out highs again. It failed. Now it's coming down to try to take out lows. That's what price does. If you understand that price always does this, no matter what you think it's doing, it is attempting to, take out a new high or a new low at all times. Okay. And so basically, it's either trending or flagging. So, how it does it, if it can take out a high, it'll move into trending. If it can't, then it'll flag. You can see here, we've got this nice solid channel. I can come right over here off of these highs, wherever this is, come right across here, point this out, come down off of these lows here, come right across this area, and there's our flag. We're looking at an apex volatility of a flag throughout this entire consolidation. Remember, as I've taught you, apex is critical support and resistance. So there's critical support and resistance, and I've already drawn it here. You can see it. And there's critical support and resistance. So what we're looking at here, guys, is we get into the middle of this area. in between these two boxes. We're going to be struggling between these critical support and resistance areas, indicating that we are, and I'll mark this a little bit darker. Okay, come in here. I need to mark the border a little darker. We've got this critical support and resistance right in between this 89,900 and 88,100 roughly. And if we blow through this lower level, then we are out of this range, and we are then going to be looking at this level as the last line of defense right here before we start a big breakdown to the downside. And the reason for this is real simple. As you look back over here, let me get rid of some of these so you can see. Go away, that. We'll get rid of that. We'll get rid of that. We'll get rid of this. We'll get rid of this. Now look at these, okay? Where's our last standout low? Right here. I'll point it out to you. Right there. Okay, that's our last standout low all the way down. Another one right here. So if we fail to hold at this support level right here, this big, I'll make it big and dark and purple or whatever for you to see it. If we fail at this level right here, then we are almost guaranteed to see Bitcoin drop down into this level. Almost guaranteed. The reason being is it must attempt to take out new lows. New lows are new, unique, or standout, or ultimate highs or low levels. That's down in this area right here, here, and here. So again, we move down into this area. If we continue to break downward, that's where we're headed. And then at this point, if it rejects, then guess what? It's going to turn back around, come back up this area. We'll see. We'll see if it establishes any standout highs or unique highs on the way down. That's the beautiful part about Fibonacci, is it's always mapping, and that's really what I'm showing you is these excess phase peak patterns, and this we don't have yet, and this we don't have yet. I think these are showing you where they may come. But the beautiful part about the excess phase peak patterns in Fibonacci is that it's always mapping out what you should expect in the near future. Every single chart I pull up, doesn't matter. It always maps it out. Like, I don't know, pick a chart. Let's see. Let's come over to the watch list. Volume gainers. I don't care. Let's pick one. Grab. Here we go. Pick one. So this is 4 hour. You can see here, I'm doing this as just a dummy example to show you what's going on. So first thing I'm going to do, I'm going to start looking for a rotation. I can clearly see flagging across here and here. We get the breakaway. We rally up, pull back, rally up, pull back, rally up, pull back, rally up. We got a new high right here. So now we look for our flagging. Do we get decent flagging? Yeah, I mean, I can say we got flagging here, pulling back into some consolidation right across here, breaking down to our ultimate low here. So that's a completed excess phase peak pattern to the downside. Now we would be looking for the invert pattern, which we get. We come down, pull back, flag, change this to red, change this to flagging. We then roll up. Where's our consolidation? Right across here. We break away, reject briefly, again, reject down off of these lows and break up into our ultimate high. Okay, so up here now, guys, we should be looking at an ultimate high off of this rejection point. This then also continues with a big, broader type of a flagging formation. You can see here, we rally up, pull back, and start to flag into a new high, pull back, flag into a new high. So you can see we're getting these broader context patterns in the midst of the smaller context patterns in the midst of the inverted patterns. Okay, now let's start looking at Fibonacci. So we have a new high right here. So this is a new high. We need to break above that high in order to generate an upward trend. We are in an upward trend off of this breakaway here. We would have this as our low, hypothetically, coming all the way across. We would eventually look for and establish a secondary low level off of here. I'll make these kind of a pinkish red. We would then secondarily establish a deep low here, which would be our next low level. We would be protecting. Doesn't look like the same color, but okay. And of course, we have our high level here. And then we have a high level here. And of course, I could go through and label even all the little smaller ones, but this is a 4 hour chart. Remember, price must always attempt to take out new highs or new lows. So we establish a high here, come back down here, establish a low, fail to take out a low. It must attempt to take out new highs or lows. It does. It takes out a high. Okay, great. We're in an uptrend. It comes up, establishes a high, it must come down to take out new lows. You can see just briefly, I see it right back over here, a low. There's the low right there. I'll mark this in a light red and a 2. So it comes up and it establishes this high, and it must then come down and try to take out a low. Well, this is the most recent real low back here. Otherwise, we've got to go all the way back down here, or here, or here. But in essence, it fails. It comes down and fails to take out the low. So fails to take out the low. What does that mean? Oh, it's got to take out a high. Oh, yep, sure enough, takes out a high, rallies up. Now, fails up in this area, got to come down, take out a low. You can easily see we have a unique low right here. It's actually kind of a standout low, if I do the technical term right. We come down, we fail to take it out. You see right here, we tried right in this area, didn't do it, couldn't do it. Failing to take out a low means it must take out a high. There it goes. Breaks again to the upside. Very simple mathematical, logical A or B outcomes. This is what Fibonacci price theory and the excess phase peak patterns are all about. And again, I can do this on any chart. You can do it too. That's what I'm trying to show you. You can do it too. That's the whole point, is I'm trying to help you become a better trader, learn techniques that'll help you identify what's going on. So now just real quickly, let's have fun. Okay, here we go. This is a 4 hour Intel chart. Big breakdown, obviously, on earnings. So we have this, continued breakdown mode. You can see we are flagging, and I'll do this real quick. We come down here to a low, pull back, flag, break down to a new low, pull back. Now we're trying to potentially flag in this area. We get our breakaway up into this area. We are looking potentially for flagging. This could be flagging right across here, or we could come up even further and try to flag out in this area. But we are now breaking away across new highs, moving away from new lows. Here's lows, here's lows, here's current lows right across here. Technically, gentlemen and ladies and gentlemen, we're in an uptrend. We have broken away from this flagging. We are now in a phase 3 type of mode right here, potentially moving up to here with an inverse pattern. We are bullish. We would be looking to take out these highs as the next phase. If we broke out below this low, we would be moving down into this area for support. If we reject here, which is the primary trend right now, is up. Primary trend right now is up on this 4 hour chart for Intel. We'll see what happens. We'll see how it plays out, but I want you to be able to see these. And that's the whole point of me doing this, is for you to see it. I'll do some more like this for you later, but I've gone to 45 minutes into a morning video. I'm going to go right now. Remember, get some. Okay, I'm going to come over here, go back to my normal watch list, and go back to the SPY. And remember, what we are trying to do is find ways to target efficient profits in the markets without getting lost in all the crud that's out there. Okay. And I want to teach you that literally you can do this. It takes practice. You know, you got to learn to be patient. Remember, 2%, 4%, 10% gains add up. If you could do 2% a day, hypothetically, okay, you could do 60% a month. 60% a month compounded adds up real quick, and it'll get you better and better and better at trading. So don't think you got to be a hero. You just got to be consistent and not blow up your account. All right, guys, go get some. Talk to you later.